Hey everybody, this is Ryan with Baldy Lock Stocks. Welcome back to the channel. If you haven't done already, please smash that subscribe button on the right hand side. That'll help us out, and also hit that bell. That way anytime we post a video, it hits your feed and you can see what the latest updates are. Today we're actually going to be talking about the tech bubble, the tech stocks. Why in the world is this stock market still driving up as hard as it is? And the primary reason is this tech stocks. This is a question that came in earlier from one of our subscribers. He said, Ryan, why is it with the pandemic, with people are losing unemployment, what's going on? Yet we're on the rise with all of our markets and people are still making some great gains. And my response back to him is, Microsoft, it's Amazon's, it's Facebook's, all these companies that are really booming straight up, even since the pandemic has happened, it's really creating some great gains, and that's really driving the force of the stock market right now. It's your tech companies. They could be comparative to the dot-com bubble, which is back in the late 1990s and early 2000s, where really people were riding this momentum swing of the tech stocks even then, and basically people were wanting to make that money, so they was getting in because they realized what was making the money, what was driving the force, and people were followers of momentum, especially investors. They're going to go where the money's at, and right now the tech stocks are where to go. You can check a couple of these tickers here. I have Microsoft sitting in the top left corner. You see where this was the all-time high before the pandemic. Here's the pandemic, and then you see it surge way past that already. This is Shopify. Shopify, you can see where the dip is, and it goes straight back up, even more than what it was before, hitting almost 1,000 right now. Amazon hits at 3,000 right now. That's some great gains for any investors. Facebook. So you see right here, everything is going up. Everything's driving up. Now, I would be very cautious at these points right now. In my opinion, now, I just want to say I'm not a financial advisor. I'm not anything of that sort. So any advice that I give, please use precaution. Do your own due diligence. Do your own research, and don't just invest something just because I mentioned. I don't want to be, at the fault if any money is lost. So just be very cautious of making sure you're doing your own research first. But the one reason why I would be cautious is stimulus packages right now are in question. Is the unemployment, the $600 extended, is it going to be in question? Are we going to get extension on that? So these are items that we would have extra consumers, with extra money basically in their pocket, being able to spend at some of these places like Amazon, Shopify, and all that. But right now, I would be very cautious and find out what the market's going to do. But if I was going to see a pullback of any kind, I have three stocks that I'm probably going to be keeping my eye and my focus on. The first one I'm going to do, I'm going to put it up here, is Snapchat. Snapchat right now is a very trending up market right now. And if you see, this is the trend that it had. It had a straight up trend. Here's the pandemic where it hit way below about $10 a share. It creeped all the way up past 25. Now this past weekend, they actually had I would say a very good quarter, but it did not meet what the market expected, I guess. But they were up 17% every year to year, so it's very solid gains there. Right now, the daily average of users is 240 million users, so that's a lot of people using this Snapchat. I do see it's dipped down a little bit, but I would guarantee you, I would try to find a support right here where it's at around 18 or so, and if it hits that, I would definitely use that as my next purchase for a tech stock. Another one I have is Zynga. Zynga is not really one that people are familiar with, but I can see right now this here has over 60. It's trading right at about $10 a share right now. It's at 60% gains year to date, which is insane for just an average tech stock. It increased its earnings per share, its revenue, and actually, if you look, it didn't do really bad during the pandemic. You'll see right here, it did not fluctuate too much. So this is a solid company right now for a tech stock to be invested in. If you want to look for something that's not the $200 range or $400 range, this is a great company that would be a great investment. And my third one I'm going to look at is Adobe. Adobe is a great company right now. That's really 35% year to date. Their software right now is really going great because of the stay at home workers right now. So people are really buying into their software and record users right now. And if you see the price action and overall product, this is a great company. You'll see where it's really booming up right now. I would definitely look to find out what the market's going to do probably within the next month and see how it's going. But for the month of August, this is something that I'm really looking into to find out where it's going to head to, and this would be again a great company to look forward to. And when it's all said and done, tech stocks, tech companies, that's the route, that's the market overall is going right now. I would find a way to get into them if you can. Find that spot that you feel comfortable paying that price for, and ride it out. It don't have to be a 1 month or 2 month. Let it be a 1 year or 2 year investment, because that's where you're really going to pay, get your paid in dividends, get your pay in your commitment of your value. If you wouldn't mind, go ahead and again, if you haven't done already, smash that subscribe button, hit that bell, like that button, and for now, that's a lock.